Let's move on and take the discussion with the Gaurav Dixit, the director at CareEdge Ratings forward. And this is about one part of the NBFC space, which is focusing a whole lot on smaller ticket loans, very small, bottom of the rung pyramid, but is showing good growth. What are the risks involved? Is the momentum likely to continue? Is what will be discussed. Gaurav, thanks very much for joining us. MFIs out of the NBFC space have given out very good, strong results in the last 2-3 quarters. One, do you expect the momentum to continue, this high growth, because of the big credit opportunity? And the other, are the risks well in check?
Hello, am I?
Yes, we can hear you very clearly. Did you hear my question?
No, I couldn't hear you. I think there's
Okay, my question is that this is the first time in 4 years that NBFCs, MFIs in particular, have overtaken banks in terms of market share. And this is because of high growth. We have seen it reflect in many of the MFI NBFCs numbers as well. But is this high growth sustainable, one? And are the risks under check?
So the growth looks sustainable. This growth has happened after 2 years of slight, moderation in the growth and performance. Post COVID, I think FY21 and FY22 were the years when the industry was not doing that good, and FY23 was the year when the rebound actually happened. And we expect the growth to continue in FY24 as well, with the growth of about 28% expected in the current year. Looking at the share of MFIs, NBFC, MFI vis-a-vis banks, that the gap is expected to be there, because the bank's portfolio for MFIs is not expected to grow at the same rate at which the NBFCs, MFIs are growing. So we expect the gap to remain where it is or rather further increase. And NBFC, MFIs are expected to sustain this kind of growth. However, as we mentioned about the risk, there are certain risks definitely in the sector. So what we are monitoring or what we are looking for is the kind of that indebtedness which is now increasing, and the average ticket size of the loans, which is also now showing a increasing trend. So the ticket size, which used to be about 30,000 maybe 2 to 3 years back, has now inched to about 42,000 for FY23. So the indebtedness and the average ticket size, which is growing up after the revised RBI guidelines, that's something which is being monitored. And in addition to it, NBFC, MFI actually are operating in a segment which is prone to, which is susceptible to lot many disasters which we have seen in the past. Like it could be environmental issue, or it could be any event-based issue which can impact the sector. So all those things are something which we keep on monitoring. However, in terms of demand and the growth prospect, things look pretty good for the sector.
Mr. Dixit, just want to understand, after the removal of obviously those interest rates last year for MFIs, they reported a very healthy jump in terms of margins. Now, how are the margins looking like, considering the repricing of loans, unchanged repo rate, potential delay in the rate cycle as well? So what is the outlook on margins for these MFIs?
So post RBI's guidelines, the margins are now improving, because the NBFCs, MFIs have got the freedom to do individual risk assessment. Unlike earlier days when the pricing was determined in terms of the rate of borrowing, now there is a level playing field for all the participants in the market. So we have seen the net interest margins improving, and with the movement from JLG, as in Joint Liability Group, to individual risk assessment, the NIMs are expected to improve. And what this is also going to lead to is improvement in the overall profitability. So ROTA and NIMs are expected to show improvement in the current year as well.
Right, Mr. Dixit, thank you so much for joining in with us today on ET Now and giving us an understanding on the MFI space as well in the NBFC sector and the growth that we're looking at over there.